Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So this week we've got very important information as Reuters agency has made the poll of the investors, analysis of the big companies, what they think about the Fed action, where it could theoretically start and what the first impact will be from the Fed. By the consensus, it's widely expected that Fed will give the hint on the tapering as soon as the September meeting. In December, it will be officially announced in a statement, and the first tapering should happen in the beginning of 2023. So approximately it should be 20 billions of less purchases of the bonds from the market. So now the pocket of the purchases stands around 80 billions. So it should be the 20 billions less. Theoretically, it might be some hints in late August in Wyoming meeting in Jackson Hole. So anyway, it should be somewhere in September. This is totally agrees with our long-term view. We said that in perspective of the 6-8 months, this gold probably should turn down, and we think that this is actually the last stage of the bullish trend this market now stands. At the same time, in a very short-term perspective, within a couple of months probably, gold could get some additional support. First of all, Fed statement in June probably will be anemic. They hardly will change some rhetoric. Maybe they will tell the same that Janet Yellen said in the J7 meeting, that they see statistics, they see the rising on inflation, but it will be transitory and it will be just short-term spike due to the bottleneck effects in the economy. So as first moment. Second, usually in the summer months, the inflation gets some relief, so it decreases after the strong numbers that we saw in the spring. So May, April numbers on the CPIs were very strong. In June, July, it might be a bit lower, and that could provide some additional support. But all other things that put the shadow on the upper perspective of the gold remains the same. This is weak activity of the investors. You see the drop in open interest. You see no purchases. That is curious, guys, because, well, somehow investors thought that the gold is get great protection against the inflation. Now we see big inflation, and many analysts tell that this is major risk currently for the United States economy is inflation. Somehow nobody hurry up with the buying the gold. So no gold rush around, gold fever. So even more, I would say that activity of the investors in the gold market is decreasing, so open interest is dropping. That should get some explanation that we're providing in today's fundamental report. So here is we have very important thing that makes more clarity on the longer term perspective, and that totally agrees with things that we have and what we think concerning long-term perspective of the gold. In the shorter term, as we're coming to the Fed statement, well, the recent performance that we saw on Friday stands not very friendly to bullish short-term sit-up, because market actually has done everything that we would like to escape. It has broken through all support areas on the intraday charts, and actually it has shown fast acceleration in a deep retracement where it should not happen. But at the same time, market stands above 1855, although taking long position here right now is not as attractive as it was a couple of days ago. But still, this is possible. I mean, if you would like to possess yourself with this butterfly. Alternatively, we could consider lower standing levels. If butterfly will fail, market drop below 1855, we could consider next level is 1820, come from support accompanying the daily oversold. Not very attractive for taking the long position, because at the first test, we probably will get the bounce that led us to move stops to the break-even. So this will be almost riskless trade here in the case of the gradual action right there. So here you you have to think about this, whether you would like to still try and take position based on these butterflies inside of this retracement, or you will be better to wait for a Fed statement and see what will happen and prepare for a possible deeper retracement on the daily chart, because this performance, of course, is not really very friendly currently. At the same time, speaking about upward target, yes, it stands the same, 1950, but would not expect that next week market will move significantly higher, just because take a look here, we have daily overbought area. So it could reach the XOP, it could reach the butterfly extension, but currently this market will move higher than the 1950. That's what we see on the daily. On the intraday charts, take a look what we have on Friday. So we have the triangle upward action that was on Thursday. So actually market here shows very clear this type of action. So first it totally ignores the good CPI numbers, then it scared something, come to its sense, and then showing the collapse or frightened by the strong inflation. So this is some scaring and some fear on the market, instability, and this is always a point in favor of the bearish type of action. So where the fear stands, there you should wait for, and should be prepared for a possible drop. And in general, from the technical point of view, we have failure breakout of the triangle action. So this type of action is mostly bearish, and theoretically it suggests a drop to the OP and 1840 area, right to the agreement around 1855, 1840. So this will be next possible target if market will show the drop down here. Still, we have the only one pattern that theoretically might be used for taking the long position. So since gold very kind market, it still could happen that it works. So this is, it carries some risk, but well, I think that makes sense to consider. For instance, on our chart, take a look, it might be large regardless cheaper to buy. So in the case if market will drop back to the OP around 68, so complete this area. So theoretically, it still has chance to reverse up. Yes, this is very strong action that we said on Friday that it should not happen. Yes, it contradicts to normal price action of the bullish markets, breaking all 50 support areas and totally raising this rally. This is not good. But pattern exists, and here you could make the decision whether you would like to possess yourself with this pattern or not. Because this actually, guys, this ABCD pattern, and actually this triple 2 pattern, is the only scenario that you could use trying to possess yourself with the butterfly, because your stop should be below these lows if you would like to possess yourself with the butterfly pattern. Otherwise, if you are not ready, and you see also big risk with that, you just need to sit in the hands and wait for potential deeper retracement here to the 1825 area if it will happen. So that's actually all that we have currently on the gold market.